We've been watching the market pick up this morning and on Friday, yesterday, the day before, we've been watching this big upswing. Do you think that's premature?
It's all in Powell's hands. I was on a couple of Thursdays ago, and right after the close, FedEx announced their biggest miss in 20 years, I think it was, and then you had Nike's report. You're going to see a lot of that, what I really cautioned is the Fed had to be slower and look at the data, look at the impact of their raises. They're screwing up the entire globe, as the UN pointed out today. I'm actually calling you, I'm talking to you from Japan. I'm in Tokyo right now where it's night. And they have a crazy currency here. It's 144 against the dollar. It's going to scramble global economics. The pound was, well, I guess it's 113 today, but it fell to 104 when they came up with that unusual fiscal policy and stimulus. So, you're not just affecting, Powell is affecting all of the globe's markets. He's affecting currencies that will affect trade, global trade, imbalances. Petro dollars. The Middle Eastern nations are long oil, obviously, but they're also long dollars, and they have an incredible purchasing power because it's tied to the dollar. So they can go to England and buy everything, and the same is true with the Chinese. They're tied to the dollar too, but it makes their exports less competitive, and they need to get their economy going. So the chain reaction of Powell's, I'd say, backward-looking data. I mean, you don't have to look anywhere. We wiped out $36 trillion of global wealth in this correction. I mean, that is going to have knock-on effects, not to mention the cracks that are developing in real estate, the construction projects that will be halted, banks' loans that can't be refinanced because the banks are freaking out because they don't know where the Fed policy is going to be. At the same time, he's been raising rates. He's liquidating the balance sheet of the country. It's the tightest monetary policy we've ever seen. And the real estate complex, the stocks in the real estate index are back to where they were in the GFC. So the market thinks the world is going to end. And Powell is pretending, and your guest earlier today said, they need credibility. Believe me, they have credibility. They look at the stock market, look at $36 trillion of wealth lost. And we're not arguing that the Fed has to act to bring down inflation, but they should understand where the inflation came from. It came from all those global stimulus packages on the back of a reopening global economy. And it was to the moon and beyond. They missed the meme stocks, they missed the casino. And now that we're building momentum and people are getting employed and wages are rising, now they want to stomp on the whole thing and end the party. And, it's kind of like, I feel like he's the captain driving the Titanic into the ocean. And consumers in the U.S. are still spending, but it's inevitable that they can't keep this up. So the Fed has to stop and just look at the data. I said it before, I'll say it again. The market, this equity market and the bond market move overnight on the Fed's moves, but the real economy takes time. And jobs, investment decisions will be put off. Capital spending will slow. The tech stocks you mentioned earlier, Facebook is giving up some space in New York. I mean, they're going to cause unbelievable calamities if they keep up their action, not just here, all over the whole globe, because they are affecting. Europe has to raise rates to protect their currencies, and they were never fast-growing economies. And their inflation is almost completely driven by the oil crisis, and particularly the Ukraine-Russia thing. So we might actually want to see how that pans out, too, because it looks at the moment with Ukraine's success that Putin this may not last that long. He may have to either give up or be ousted, and the markets will rally on that. I think the market is looking at that purchasing number and saying the manufacturing index and saying, well, maybe he'll take notice this time and we're reaching the top of the curve. I'm not so sure. I think the Fed governors are really not paying attention to the real economy and what's happening out there. The housing market, car sales. I mean, you're going to see slowing everywhere. Nobody can afford a car with a 7% payment. And, and just look at the stock market. I mean, the wealth lost is money lost. That's purchasing power. High-end homes in New York, you reported on that a minute ago. I mean, it's going to pan out across the globe, not just the U.S., and there is no engine of growth. The exciting thing, if you want to look at the positives, it is Russia and the Ukraine situation ending probably earlier than we thought, maybe within 6 months. And eventually China will reopen, and that will actually help the global economy as they go back to work. But other than that, I can't think of any major positives right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.